Hello everybody, today we have some real estate rock stars in the Tampa Bay market, straight true professionals. We got an experienced real estate agent, Anthony Caracappa, a born and raised Tampa native that knows everything about Tampa Bay inside and out when it comes to real estate and the community. We also have Joe Goodyear, our mortgage real estate professional.
Yep.
He's pretty much born in Tampa and lived in upstate New York maybe a few years and came back in his late teens. So for me, he's raised in Tampa Bay. New England.
Thank you.
Okay. There you go. Shout out to Tom Brady. You know, we like him as the Bucks. You might like him as a Patriot. You might know him as a Patriots guy, right?
Yeah. Listen, the guy's the GOAT.
He is the GOAT.
It worked either way.
Exactly. Now he's the co-host, right? Doing what we do. So shout out to Tom Brady on that. But Joe Goodyear, Anthony Caracappa, experienced real estate professionals inside of our Tampa Bay market. These are the guys you want to connect with when you're looking to purchase a home or sell a home or finance a home or create or finance a home. I mean, Joe Goodyear, I'm pretty sure you close many types of deals, whether it's it could be a commercial project or just a single family residential or multifamily type of residential unit, right?
Yeah, absolutely. I mean, what we see a lot more of, sure, there's some creativity coming down the pipe as far as entrepreneurs wanting to blend their workspace or their property into a work and home area, which gets a little bit tricky. But, you know, we definitely see a lot of that nowadays. One of the other things that we do a lot, and it's just by virtue, I think, of buyer preparedness, is first-time home buyer or self-employed buyers that have a stigmatism or a belief that because they don't use a lot of credit, they have good credit and they have good income. But that's not exactly the case all the time.
They have a lot of credit, but don't use a lot of credit.
They have a lot of income. Don't use
a lot of credit.
A lot of credit, right? So they are now, because of that, they're not as prepared than they think they are. Maybe cash is in hand, but credit scores aren't ready. And unfortunately, the lenders want to see a blend of these things.
A blend like telling someone, hey, don't only have one credit card, maybe have like three. Is that kind of like what you mean?
Yeah, to a degree. You can get away with having one credit card, but having no other credit, it makes it difficult when you do need credit to get that trust from those lenders, the credit agencies, whoever is the one that is doling out that trust or that lending you that money. Right? They want to see that you've gotten, or been able to handle the trust from someone else as well. So a lot of times the instructions we go through are just making sure you have a card that you use on an active basis, maybe two, you flip-flop between them. If you pay them off, it's fine. Pay them off. Mm-hmm. That's okay. That just builds your credit up. And listen, you're going to get points as well. So it's going to give you value on the other side of things. You like to travel, whatever it might be, use that to your advantage.
From a mortgage lender standpoint, is the difference between having a card that you're financing or a credit card that you have, are those two different things, or is that kind of like the same thing when we're talking about credit that a lender wants to see?
Yeah, so that's a good question, because an installment loan, like a car, an auto, versus the revolving credit, the installment loan looks really good. It's consistent, it's long-term, right? So you'll have that sitting there and you make those on-time payments over and over and over again. They love it, right? Little known fact, when you pay that off, a lot of times you'll see a dip in your credit for the first couple months, because you just
paid it off at zero.
So now you have less trust, less open debt, if you will.
Even though they paid it early, is what I think what you're saying.
Well, it's not just paid early; it's just paid off. So now you have less transactions or trade lines, right? So if you've only got one or two, it doesn't mean it's bad as a person. It's great, but if you want to type of person that needs credit to borrow and lend things on a regular basis, you've got to also have that in place and show that you know how to handle it.
I see. The lending side wants to see it active and see it actively going on.
They want to see it, right? They want to see that you can handle it. Exactly, right? You can handle the responsibilities of it.
No, that's great information that a buyer needs to know, and why a mortgage lender like Joe Goodyear comes into place is they're going to educate you, because you might have the money. Again, you have the money,
It's
you make
usually
the
not
money.
the problem.
Yeah, you make the money, but when you just don't want to pay in cash, full in cash, you want to finance it and go through a lender. What the lenders are looking for they're looking at active, let's say, debt to ratio
accounts, trade lines, right? So a trade line is you've got a credit card or 2-3 credit cards, you've got an installment loan. So a great way around this, and I instruct some of my, if you own a business or something of that nature, right? A great way around this is put down a lot of money and put it over a 5-year. I mean, you're probably going to get a really low percentage on that rate because you're putting down enough money, but you'll have that installment consistency in place. And even if you pay off a little bit extra each month, so maybe you keep it for 3 or 4 years instead of 7 or whatever it might be.
So give us an example. What's that look like? Just a basic example of, you say spread it over 5 years.
So an example, you can walk in and, they're going to give you an opportunity for 7 years or 6 years on financing. And you don't really want to wait that long to pay it off. But at the same time, having those reoccurring payments on an installment is really good for your credit. And then if you're not the type of person that wants to use a credit card or something like that on a regular basis, this is good to have ongoing. So now, it's a $50,000 vehicle. You put down $30,000. You've got a $20,000 debt over 7 years. Look at the numbers as far as your interest rate and how much they're going to charge you. So you can always balance that out, right? And there's places you can go to get these numbers, right? But say it's a $150 payment a month. You make that payment on a recurring basis. You set it up as a reoccurring payment through your bank account. Now you've got a history and a trade line for credit that makes you look good. And now when you want to when you want to borrow and that you get that money from the bank, the lender, you want to invest or purchase a home or whatever it might be, you've got now something in place that helps you out and gives you that credit trade line.
And that's the perfect example why you want to align yourself and partner with a professional mortgage lender when you're trying to make moves of purchasing a property, whether it's 4 units or less. What's your scope look like? Are you doing multifamily? Is it only single family residential? What type of buyer are you able to serve in the community?
We can serve all buyers. The market in Florida doesn't have as many of the multifamilies as a lot of what you see with kind of the up north areas. So we are, a lot of what we do is the single family residence. It's the, we've got a lot of HOAs here. So that's the PUD, Planned Unit Development. Mm-hmm. That's what those are. And then, of course, we're a beach community. We all love the beaches. And for investors, that's the condos. They're called condotels and things like that. And that's another story. That's There's a lot more involved in that, but we could do those as well. Right? There's a lot more involved there.
And it's very important for even not only the consumer, the buyer, but the real estate agent to have a good partnered mortgage lender that you can work with that can serve all the clients as a real estate agent has. I'm sure Anthony Caracappa, you probably have a good relationship with Joe Goodyear here, and it's important. Why is it important to align yourself with someone with the right mortgage lender?
Thanks, Joe. So the biggest thing, kind of continuing on from what Joe said here, is that a real estate agent should absolutely be able to talk a little bit about financing, right, and a little bit about funding and like how are we going to finance this purchase, right? And so me as an agent, I like to know a little bit about it, right? Know the high level of, hey, this is how we're going to do it. This is how we're going to negotiate the deal. But I'm always going to refer to my lender, my professional, of who's going to know all the exacts, all of the details, because every single situation is different. When it comes to lending, it's more of an art than a science, right? Every situation is different. Every situation is different. Right? Every situation is different, and just like
puzzle.
Right, exactly. So just like what Joe was saying, when you have somebody that's a first-time home buyer, somebody that has great credit, somebody that has cash, somebody that doesn't have cash, there's a lot of different things that go into it, and the biggest thing is having that professional that's going to guide you through that maze of, okay, I have cash, or I have bad credit. I'm a first-time home buyer. I have great credit, but I have no cash. There's a lot of different things that goes into it, and so having that guidance from the lender is outstanding. And then having, even more importantly, the relationship between the lender and the realtor is that I have the conversation with Joe and say, okay, this particular buyer is going to need a little bit of cash. This particular buyer is going to need a little bit, to be able to make this purchase of a longer closing period, because we have to adjust credit somehow. So the biggest thing when you're speaking with a real estate agent when you're going to buy is like, what is your relationship with your lender? Who can I talk to about lending, because they have to be on the same page. The realtor and lenders got to be on the same page,
right?
Especially if you want to close.
Sure.
Yeah. Especially if you want to close. So that's.
Yeah, having that relationship with a realtor and lender. How do you look at the partnership of mortgage lender and realtors? The people that you partner with, what are you looking for when you partner with a real estate agent?
I mean, there's so much to it, because you're talking it's a daily basis, and sometimes you're talking through other channels,
right?
Because there's obviously other facets that are going into it, but making sure that your relationship is good enough where the client knows, that the majority of the things that are going to come up, they may not even know about it, and that's the goal, is to make sure that they don't have to worry too much about that on the client side, the buyer side, and that we take care of it behind closed doors, and we let them know, hey, we had to do this.
There's multiple times where I'm going to show properties, and I'm going to look at 7+ properties for a buyer, and so I'll vet a few of them, because hey, taxes are higher on this one, or HOAs are higher on this one, and so I'll send it over to Joe and say, hey, what do I need to negotiate here?
Yeah, we're at the
because
top
we
of our line,
we have an idea already of where bottom number where our client needs to be able to purchase, and where our client needs to be for me to be able to make a competitive offer for them to not only be able to be competitive for the home, but also get a great deal. Because that's, especially right now with the market where it's at, them buyers, they want to get a good deal. They want to get a good deal, and it's capable right now. It's a buyer's market right now. Right. So having that conversation with Joe to say, okay, I don't have to guess of where that purchase price needs to be, because I've already talked with Joe about it before we even walk in the house. So that having that continuous communication with your lenders is such a big deal. It's such a big deal. And so when you're looking at realtors or you're looking at lenders, like who is the other counterpart to that relationship, because they have to be so together.
You want to deal with an agent that also has the right relationships to help service the client,
right?
The real estate client.
To that degree too. You're in Tampa, a growing market, right? The numbers have changed. Across the nation, but Tampa especially has seen a lot of growth, and for some of these first-time home buyers, some of these areas, they might want to be in. You're closer to this, you're closer to that. The numbers get tight. And we've got to be very strategic, communicate a lot on that, because you show somebody a house at the top of their price range and they fall in love. We have to be ready to make that work.
With today's, we're in 2025, coming off of the last 6 months of 2024. Seems like interest rates were on an incline. Buyers are kind of like on the fence, and definitely more on the fence as they're hearing the interest rates incline. But at the same time, we all know that there's many homeowners that are just, at the end of the day, getting tired of waiting, right? What do you feel like the temperature of the market is today in the first quarter of 2025? Where do you,
it's a buyer's market, though.
You're feeling more of like a buyer's market.
It really is, man. It really is. I've in the last 7-8 months, I haven't done a deal for a buyer at list price. They're ready. No, they're ready to negotiate. And this is, when I say Tampa, Tampa, Lutz, Lakes, Greater Tampa Bay area, Carrollwood, all of that. You look at these homes and they're sitting on the market for a little bit, right? And it's a great opportunity for a buyer to come in and say, hey, I have this cash, or hey, I have this loan pre-approved, ready to go. There's a lot of different opportunities for a buyer to be able to position themselves to be very attractive for a seller that's been sitting on the market for 190 days. Right.
We want to help the sellers out too. We want to put them on. To be honest, at the end of the day, the sellers, if you're on the market, let's just say over 100 days, right? And it's very common. It's very common to be on the market right now, listed at 140, 100 plus days. They're just looking for an official offer to come in the email, on the table.
Somewhere to start. I don't know how many times you go in, you don't know what the story is until you actually get there.
Right.
If you don't actually explore that, you don't know what the story is. I mean, they have something on the other side that they're working, they need to do, or they're more motivated for whatever reason it might be, and they just they're waiting for that opportunity to move.
Joe, on the lending side, do you feel the market? Do you feel like it's picking up? Do you feel like it's slowing down? Like, what do you see versus the second half of 2024, right? Versus the first quarter of 2025. Obviously, there's a president in position. There's a lot of more different type of energy going on. Are you seeing anything different, or does it feel the same way?
You gonna put me on that? Okay.
I'm just saying, like the first quarter in general. Do you feel like your phone calls are picking up a little bit?
I think there's a lot of reality to the fact that rates are better now than they were the end of last year, we'll say, and 2023, the end of 2023, that is, and there's a lot more optimistic outlook. It's a slower expectation now, so people are coming to terms with the situation that is at hand. I mean, rates aren't really gonna expected to move too much from where they're at.
Exactly right.
So,
this year.
Yeah. So just to kind of build off of what you're saying, I mean, what I've been reading online and what Joe and I have talked about is like the last 12 months or so, maybe even a little bit longer than that. Rates has been pretty. They've been pretty consistent. I mean, they're pretty.
Yeah, it's a relatively stable.
Yeah, it's a relatively stable. Which at the same time, the Tampa market has been so hot. It's if it cools down a little bit, it's still a very good market. It's still very stable. And so what I've seen, or what the conversations I have with other people in the industry, with Joe, is that looking forward, rates are going to be pretty stable.
Exactly.
And which means the market's going to be pretty stable. And stable for us is going to be pretty, I think it's going to be pretty lucrative because, again, people are moving to Florida.
Consistency you can at least bank on and bet on. You don't feel like you're making a poor decision by pulling the trigger because, rates are going to go down so fast, or, the market's going to... You can at least have confidence in some stability of the action that you're going to take with the regards to the market's projections, right? I mean, the idea here is that the industry as a whole in lending is talking about don't expect any crazy changes. However, there should most likely we should see some slow, steady easing.
Right. Probably in the sixes, in the mid range,
Which, ideally in the high towards the end of the year, into the mid sixes or so. For your well qualified everything, and there's going to be ranges to all these things, right? So,
what's a response? Let me start with the realtor. We have the realtor and the lender here. Let's say with the realtor, what do you say when the buyer's response right now by default is, the interest rates are high? Are they high? I mean, like,
historically speaking?
Yeah.
No.
Right, no. And it's something that we deal with all the time, obviously.
Exactly.
I'm constantly talking to buyers and sellers. Mm-hmm. Hey, the rates are high right now. The rates are so high because most, and this is just people in general, and not just real estate, just everything. Yeah. People have a short memory. So they hear 3% from 2 or 3 years ago.
They think it should be.
That should be 3%. Like that was
market for 5 years. You're looking at things. Going, this is horrible.
Yeah. What was it
That's
before
not
that?
True.
What was it before that? So I deal with this question a lot, and so this is the way I approach it. It's like, hey, look, we're not going to see 3%. I like to be very transparent, very upfront with buyers because I don't want somebody. I don't want somebody fluffing me up in anything I do. So hey, like this, we're not going to see that again, and if we do, home prices are going up, just like they were before.
You're gonna pay
home
more.
prices are going through the roof. So, but realistically, we're not going to see that again, anytime near future, right? So the idea is that, hey, if you're really in the market to buy, this is the environment to buy in because this is what it's going to be the next 12, 24 months. Right. It's all up and down valley thing, and we're on the climb, really, if you think about it. We're on the climb with interest rates and the market of where it is. So we're on the climb. Even though it's a little bit more steady than you think about a climb.
Values on the climb as opposed to the rates if we stay steady and see some slight easing as we go, right? That's what they want. The Fed, they're trying to set things up so it's a more gradual.
Not only that,
that COVID situation when things dropped and did what they did, which not going into the full logistics of it it's spurred a frenzy.
I really don't, and and I'm a true believer of this. Is like, even if you're Warren Buffett, you don't know what's going to go. You don't know what's going to happen. And like, so do you want to be the guy on the sideline?
Warren's gonna be pissed.
Yeah, he's gonna be mad that I said that. I don't know the guy, so. but you don't know. Like, you're gonna be waiting all this time when you could have purchased.
Yeah.
You could have bought before prices went up. Like, you don't want to be that guy. You don't want to be that person waiting on the sidelines. Like right now, what I'm seeing, and whenever I talk, I'm talking about the last 6 months. Like, it's a buyer's market. So you think about interest rates, yeah. Over time, like maybe there's a dip or something, you can refinance an interest rate. You can't refinance where you bought at. That purchase price is set. You can't refinance that.
And when we say buyer's market, you're speaking of when you're mentioning buyer's market. What would that mean to the consumer?
The sellers are more desperate to sell. I mean, that's the simplest way to put it. The sellers are more desperate to sell. They're more willing to give up some on the price. They're more willing to give up more on the inspection period. Where, hey, I need this addressed. I need this fixed. I need this remediated. They're a lot more desperate to give up that kind of stuff to get you into a great deal. Mm-hmm. And that's what it's about. The interest rate is something that, it's cost. But they're going to give up more as far as
So with that in mind, do you think a lot of the buyers maybe that weren't in the market in the COVID era have any idea that people were selling homes with defaults, things wrong, and they were still selling them higher than market value, getting over that and not fixing?
Right.
And so
exactly. Some of them, they're going to relate that either they had a relative that did sell and hear about their magical story, how it sold one day with 30 offers and whatever.
Like, it's still buried a little bit in that ego of the seller, and now that's starting to kind of move through. Yep. Right, reality's starting to step back in.
There's a true market where, hey, if the toilet doesn't work, and we're in negotiations closing the house, the seller should fix it before closing. I mean, instead of saying, hey, if not, we're not going to do anything, and if you don't want it, we're going to pick the next buyer. Right? Yeah. That's what was happening.
Take your 50% down and fix the toilet after you get in. Now we don't have those buyers that are coming in like that, because you don't have to be that aggressive to get into a house. Yeah. Now the seller's more responsible of, okay, let's make sure we have a clean 4-point. Here's the inspection. Here's everything.
They want to close the deal.
They want to close the deal because they don't want to go back on the market for another 130 days, 190 days, whatever, Which is very common right now. Very common. For a seller to sell a house, yes, your house can sell within 30 days, but to be honest, majority right now is don't be surprised. 160 days, absolutely.
140, 160 days, 3 to 5 months. It could take that long.
Unless you're being very proactive, with that inspection. You've got someone that comes in, does an inspection, and they say, well, this and this looks a little shabby. You spend that money right away, and you take care of that.
Well, that goes back to realtor as well, because I've had my last 2 listings. I mean, we got them under contract within 5 days. So it comes back to that realtor relationship with the market and with other realtors or lenders. Joe and I are speaking all the time. I have somebody that's looking in this area. I have somebody that's selling in this area. Like, how can we link it up before we even put it out on the market? Uh-huh. So there's deals like that sometimes that happen when you're thinking about some of these sellers that, hey, I've been on the market for 160 days. Or who's selling your home? Like, what have they done? Where's the marketing? Who have they spoke to about it? So how have they presented it? Are they taking pictures with the iPhone? Mm-hmm. Are they getting a professional photographer in? Are they doing staging? So there's a lot that goes into it. And again, it's about that. It's about having the professional kind of lead you in what's the right thing to do.
When you're speaking with a seller as a realtor and you're getting ready to prep to sell their house, when we talk about pricing, right? I think by default, if you would talk to a homeowner, a seller, what's by default? They're going to want to think about the max price mentally off the rip. Yeah. But when you're having discussion with a seller to list their home, how does that look like for you? Are you kind of like having to humble them down a little bit on the pricing, or
absolutely.
What's your experiences?
Absolutely. There's always that fact, because you always have that relationship with your home that is outside of your normal financial thinking. Like, I love this home. Connection. Your emotional connection. I was lost for words. The emotional connection with your home, and so I'm dealing with that all the time. And so
they haven't really come to terms with letting go yet,
right?
Maybe
right. They haven't come to terms with letting go, or really so.
coming terms with what is my home really worth?
Yeah.
Right. So what is my home really worth? So I'm having that conversation all the time. So what you do is a lot of times, and this is not just like giving into the client. This is more so of, okay, let's try it your way. So let's list at a reasonable amount. Obviously, we're not going through the roof, right? Let's list at a reasonable amount, knowing that, okay, our first 7 to 10 days is going to be our testing period. Okay, how many offers do we get? Who shows up to the open house? Obviously, your agent's doing an open house, right? You're going to do a couple of them in that first 7 to 10 days, right? So what's happening in that first 7 to 10 days that you're listed? Because that is the tell sign right there.
The market is going to talk to you.
The market is going to talk to you. Are you overpriced, or is it condition crap? Right?
Mm-hmm.
Like which one is it? There's only two reasons that home don't sell is the condition or the price. So as long as you get that understanding, that agreement from a seller in the beginning, and they understand, okay, hey, we're going to go with what's reasonably a higher price point, with an understanding of
making an adjustment.
We have to make an adjustment quick. I have a couple coming up. I have one coming up in Seminole Heights, one coming up in Clearwater. That it's that same agreement. Like, hey, this is where we're at as far as what we're going to list. But we have to understand that if we don't get the activity, we have to make an adjustment quick. So it is a conversation
for sure,
especially in this market compared to 2 or 3 years ago. Like, yeah, put it for 10 million. It doesn't matter. But you're going to get 10 offers at 10 million. Yeah, exactly. It didn't matter. Right.
Okay, no. Yeah, about 370 days from now, you get an offer maybe.
Yeah, right.
A lot more gray hairs. But,
yeah.
You know, but that's pretty interesting. Anthony, we were speaking before. You have a real interesting story. I think that you've been in the real estate business as a professional realtor now for, I think, going six plus years. How did you get into the real estate business? You're born in Tampa, raised in Tampa. You were in other industries before you became a professional real estate agent. How did that transition look like?
So born and raised here, been in the area all my life. Know a lot of different, industries, different people. It's just been here forever. I 6 years, so walking into my 6th year as a real estate agent. Before that, I had a decorative concrete company, Tampa Custom Concrete, that's actually still running around installing now, right? So shout out Tampa Custom Concrete, right? I still send them deals and things like that. They do excellent work, right? So that's kind of my little baby, right?
Oh.
So I had that. I started that company, had that company for about 3.5, 4 years. And then before that, I was a business banker in the area for about 15 years for one of the bigger banks in the area. So the business banking thing and the real estate thing was very similar. You have a client that's looking for a loan or looking to purchase a building or looking to get some capital to fund some kind of venture that they're doing. My clientele were small business clients. And so we're looking at 5 million and plus as far as sales. So it's very relatable to your family, 4 or 5 people family that's looking to purchase a home. Very similar. Yeah. Hey, here's the same area, here's the same market, here's the financing criteria of what we need to get it done. And so being out in the market and talking to the same players in the market, it was very transferable to be able to transition, from that business banking to real estate. And I've enjoyed, me personally, I've enjoyed it because I love helping people. Even the small business client was very relatable to me. Just like the buyer that I'm dealing with is very relatable to me. I'm not dealing with, multi-million-dollar companies that we're dealing with CEOs all the time and not somebody that owns and loves their company. Same thing as I'm right now, what I'm dealing with is somebody that's going to live in their home, with their family, very similar to my situation. So,
what triggered that thought to become a real estate agent? You're dealing with banking industry, owning a concrete company. What is there something that you saw that triggered you to kind of say, "Hey,
I'm a good buddy of mine, man." To be honest with you, I bought a couple homes from, when I was doing my thing, and in the banking industry, I bought a couple homes from, and a good buddy of mine. I'll shout out Chris Lai, he's a good friend of mine, real estate agent. He's been in the business forever. And he told me I sent him so many referrals.
Right.
I sent him so many referrals. I sent him so many referrals. But so very, very good buddy of mine. And he had been telling me for years, you should get into it. You should get in. You'll be good. You should get into it. And so when I sold the concrete company, first, let me back up a little bit. when I was a business banker, I was like, hey, I could do my own thing and work for myself. Concrete company kind of proved that model for me. Like, oh, I can work for myself and handle myself and not worry about, getting a W-2.
Sure.
And so, Chris kind of reinstated that. And so, Chris kind of said, hey, you should get your license. And so I joined in with him. He kind of showed me the ropes in the beginning. And that's how I got into it. And then, no looking back after that. I love what I do right now.
You've been killing it.
I love what I do.
When everybody else is not, when 75% of the agents nationwide aren't closing one deal, you're like 30xing them, right? You're really doing a great job. So we want to salute you, man, Anthony. You've been killing it out there in the field and doing great service for people looking to buy and sell homes in Tampa Bay. They should reach out to you. If someone wanted to reach out to you, what do they find you at social media or direct? What's it look like?
Social media. It's Anthony C, the Realtor on Instagram, Facebook, LinkedIn, all of that. You can't. It's not hard to find me.
Anthony C, the Realtor.
Anthony Caracappa. You can put that in Google and find me. You can find me. Yeah. So, or ask your friend. They probably know me. So it's out there. Instagram, Facebook, Anthony C, the Realtor. Or Homegrown Realty. You can find us there.
Dope. Good. Yeah, Joe, that's pretty amazing. How about Joe? When they're finding you online, I know you're getting a lot of business from just all different areas. Is there a preferred place that people should look for you to contact you? What do you prefer?
I'm online at listen, Joe Goodyear.
Joe Goodyear
itself, Goodyear.
Yeah, exactly.
It speaks for itself, right?
Dope.
So I went ahead and got myself the landing page, Joe Goodyear Loans, www.joegoodyearloans, and my Facebook also. You can catch me there as well. Those are probably the best ways to kind of get in touch and find my information at this point in time. So
love that. JoeGoodyear.com, JoeGoodyearLoans.com.
JoeGoodyearLoans.com.
That's simple. Right. That's dope, man.
Yeah.
Are there any particular clients that you're looking to work with? Like, is it commercial, multifamily, single family? Like I think
just like Anthony was saying, kind of. So in a past life, I was a personal trainer, and that was a really rewarding career.
Yeah, right.
For me, that was something that I enjoyed, being able to help people. And I got feedback from that, right? I got either it was a visual or, the appreciation, or, working with kids that maybe had, issues with posture or development or something like that, and solving problems. Like everything was kind of a puzzle. So, as far as lending is concerned, it's always a puzzle. Like we were talking earlier, but being able to help, first-time home buyers is amazing. The gratitude, knowing that maybe they tried before, or they've been waiting, or I helped them, with a credit scenario where they're not quite ready there, but we go through a couple steps, and I'm able to point them in this direction and make some recommendations, and get them in that home, and the gratitude that I get from that is amazing. Not to say that I don't love helping.
You're a natural service person.
Else.
You're coming from a place of servicing from heart, more or less, to say, to see people improve, and you get gratification. That's a good thing,
like
man.
Everybody else, but it's nice that there's that's not the only part of that comes through.
That's them.
And having some of those opportunities,
building those relationships, for sure.
For a couple, they're not quite married yet, or they just got married, they get a kid on the way, or and we've done countless deals together as well, where we've helped in that situation, and he's getting, we're in a scenario or in a market where there's no seller concessions happening, and I was like, listen, we're gonna need some help. Like we're a little bit short. We're getting a little bit of money from here. We need some money from here. Auntie's gonna kick on a little bit, but we need a couple more. We need a couple thousand.
And you figure out the solution from how to make it happen.
That's why it's so important to have that conversation before they go out, so we know what we got to get in order to make it work.
That's good.
Yeah.
That's great. We always like to ask this question. Let's start with Joe. Your last deal let's just say your last client you closed. How did you meet them? Like, how did you come across? Because we want to come from a space to educate other people as well. There's a lot of people looking to become a successful mortgage lender, or a local or a successful realtor. They don't know where to start or how this works. Your last deal, for example, how did you come across that client? How'd that even happen?
Last deal that I closed,
actually. So I was going to say that was our deal, but I did have one recently, which was actually a referral. Came through another agent that I work with, who has similar to Anthony, become someone that I talk to on a daily basis, and
Right.
by virtue, really become a friend. And that's that daily contact, I guess, that you want to have. I feel like you want to have a realtor who has somebody that immediately in mind has a team. That could be a lender, an inspector, insurance. It's more than just a team, as in, yeah, I've got a bunch of agents I work with in an office. I mean,
Right.
how does that help the buyer?
Mm-hmm.
But it came through a referral, right?
Oh, okay. So you built relationships in the community with other agent partners and
very active in the community.
kept the contact.
Yeah.
And that's how they reached out to you, say, say, hey, we have a client.
Which actually, that was actually guided by, I coach my kids' sports, volunteer coaching, and I actually had met that family through that. So that's where
the family, the realtor.
Mm-hmm. Yeah.
Okay, you met him through. Okay, there you go. So that's how it kind of went
So
through
I
your
guess that
SOI.
would be,
You're coaching with your kids' sports aspect, and then built a relationship through there, which led to connecting with another agent. Built a relationship with the agent, and the agent one day sent you a referral.
That's right.
That's a great story. That's dope. How about Anthony, man? The last deal you kind of like closed. How'd you meet that particular client? How'd that become a lead?
So what? Today's Friday. Today's Thursday, Friday.
It's Friday.
Friday.
Hey, you.
So I had a closing yesterday. It was a
Congrats.
listing. Thank you. A listing I had. It's kind of unique, right? So the particular property I had sold 3 years ago, right? So I sold the home 3 years ago. The particular buyer, I was a listing agent. The buyer was buying the home. Her and I kind of hit it off. So it got to the point to where, and good or bad, for whatever lack of service or whatever it was, her and I kind of started to hit it off. Met her at the inspection. I'm always there for the inspection for listing or buyers, and so her and I kind of hit it off. That deal finished again 3 years ago. She bought the home, lived in it for the last 3 years, and instead of Rose contacting her buyer's agent that she bought the home with 3 years ago, she reached out to me directly.
Wow.
Yeah, she reached out to me directly and said, "Hey, Anthony, I want to sell the home. I know you know the area. I just like the way you conducted business and the way you handled yourself, and I think you're going to be the one to sell the home, the highest possible price." So we listed it. It sat for a little bit. This particular home maybe sat for like 60 days. We were shooting for the moon. She had just bought it 3 years ago.
Right.
There wasn't a whole lot of equity, and she's at the point where she didn't like hurricanes. She's going back there to Virginia, right? This is where she's going back to. So there was a little
happen often.
Yeah, exactly. So a little bit of a hurdle, a little bit of a uphill battle to deal with. But she had reached out to me directly. We ended up listing the home. We went through the whole motion of getting it listed, getting it sold. It closed yesterday. We ended up selling it so it was the second highest sale in the neighborhood in the past 6 months. We had a little bit of appraisal issue, but again, just working through that, knowing the market, knowing what needs to be said, what needs to be done to be able to get the best possible sales price, which I think we did, because in the end, she was happy. Another great thing, the buyers were happy that bought the home. They were happy.
You're right.
I mean, so I met her through a previous transaction. Again, my sphere of influence of people that have either worked with me before or know somebody that's worked with me before. So that's where I got the rest
That's
of
a
it
great, learning lesson for agents out there. If you really think about it, you list the property. Let's say you're a listing agent. You have a sign in the front yard. When those buyers come, they already have a certain respect for the listing agent because they see you on the sign already. And they're coming to the house during the showing, coming to the house during the inspection.
The open house, all of that, yeah.
So they build that. So the lesson is that if you're the listing agent, continue to market to that property, because the crazy thing is that buyer's agent, probably after they close that deal, it's a high chance they never even heard of that agent again, ever after that day.
Yeah.
So they're not following up they're the buyer's rep, but they're not following up with the client after they close the deal.
Yep.
And that's where the true relationship gets built after the deal is closed. So kudos to you for just building that communication, being there for that client and giving her that confidence. Let's say, hey, yes, I work with this agent as the buying side. I never heard from her again. I appreciate you following up with me and keeping in contact with me. Now it's time for me to sell. I want to use you. I want to use you. You know.
Yep.
So
Oh,
that's pretty dope. So man, great stories that you guys got going on. And
Thanks, Joe. I appreciate you, man. Yeah, setting this up. Yeah, this was good.
Man.
Let's go and get it. So 2025. Anything going for 2025 for you? What's your goal? Because you had an explosive year last year.
I did, and it's picking right back up. I mean, I haven't let off the gas, and first January was phenomenal.
Right.
February's looking like the same thing, and so I got some big things coming up, and so yeah, it's just keeping my head down and trying to serve the best way I can.
There you go. Work works. Keep at it, right?
Listen, I'm just gonna try and get out here and just be more present, or be present and have a little bit more of that presence online.
There you go.
Breaking through a little bit.
JoeGoodyearLoans.com. You make sure you guys tune in. Make sure to connect with him. Their information will be in the description below. If you're looking for that professional real estate agent in the Tampa Bay market, you already know Anthony is the man to go. Find him on social media. I think it's Anthony C.
Anthony C. the Realtor. Yeah.
Anthony C. the Realtor and Joe Goodyear, your mortgage lender.
Right.
All right.
Thank you.